Good morning, everyone. Thank you so much for watching my YouTube channel. And today I'm going to talk about
For pairing.
stock market. Uh,
Paired.
Stock market, guys. You see right now. Let's see, SPY 500. Is it SPY or S and P 500? It's around 4,369. Nasdaq 13,500. Bitcoin 29,000. Bitcoin, guys, doing good. Tesla, guys, you see, some few minutes ago said Tesla may be original meme stock, but Bangladesh won't let us statue has been too sharp. So, guys, this Bangladesh warning, and then Pesenge say check out the wells are doing with the Papa Alibaba Group Holding. So, guys, we are going to see what these people are talking. Uh, let let hear, guys, about raising 10 yield curve. This will be game changer. Let's go and hear it, guys.
Stasia, from your vantage point, do you agree that if 10-year yields start to rise, if people's longer-term inflation expectations and rate expectations rise, that will be the game changer for risk assets?
I think it would, Lisa. That's one of the big reasons why tech had the rally that it had earlier this year, is because of multiple expansion as the 10-year yield was declining. I mean, I do agree that if the 10-year starts to rise, we're now repricing the longer-term inflation expectations. And fortunately, in the United States, what we've been recently repricing is the growth expectations. That's what drove the 10-year yield from 3.4 to 3.7%. But to the extent that the 10-year starts to rise because, all of a sudden the inflation expectations start to become more entrenched, that would certainly cause a problem for risk assets. And, to kind of go back to the point, Lisa, you were making about the UK CPI, I mean, it is stunningly high, but I also think it kind of showcases how the Fed has actually done a good job of getting ahead of the curve finally. I mean, if you look at the UK, you've got the inflation rate at 8.7% and their Fed funds rate equivalent of 4.5%. Now, that means that the rate is below the rate of inflation. That's not the case anymore in the United States. And the Fed at 5.25%, 5.5%, that's over and above the core PCE inflation of 4.7%. So that, to me, really sort of demonstrates that the Fed actually has finally done a good job of getting ahead. And I think that notion will give the Fed the opportunity to pause over time. And for investors, seeking to allocate to global equities, that's why they're going to continue to prioritize U.S. equity.
So, guys, this news about 10 years yield will become game changer. So, guys, that's very important for. I'm going to do more research about what does mean when 10 years yield will become to raise. What does that mean? And we see right now, guys, some of the stock is moving, like for mining, hut, and like this one is moving very fast. This is dealing with mining with Bitcoin. So, guys, let's go on with the. We know, guys, Alibaba yesterday, the CEO was. The changes new CEO. They have new CEO, and the guys. Let's go to see what's going on with the FedEx earning. They estimated they will miss their profit, and let's hear it, guys.
Courier reported earnings and a profit outlook that missed analyst expectations. For more, Bloomberg's Simone Foxman walks us through the numbers. A 10% cut to global sales. I mean, that's enormous. What is that telling us?
Well, certainly, I think there was this feeling around FedEx here that you have this global weakening outlook versus some of the cost-cutting plans that has been pushing forward. And the global outlook looking pretty grim and in line with a lot of other things we have seen as well. They talked about weaker than expected recovery in Asia, although they do expect that to be a tailwind ahead, softening U.S. demand and domestic volumes, a little bit of green shoots in Europe, but again, not offsetting those overall impressions. A slew of companies have really been talking about how they've been able to reduce freight costs. It's good for the retailers, but it's not so great for companies like FedEx. But, in some level, we should have maybe expected this. You look at something like U.S. Corrugated box industry. We saw sales there down 11% from the prior year. Companies that manufacture this operating at about 70% of capacity. So clearly, this demand for boxes, some weakening e-commerce post-pandemic, these are something we've seen broadly in the industry and, carrying through to FedEx as well.
I do want to start with Abigail.
So guys, yesterday I did a video about the stock market, U.S. stock market overbought mail. So guys, stock market. That's why I think now it's time for all big stock market like Tesla, Apple, everything to cool down. So let's hear this one, guys, and then.
Left off here, the idea that when you look at some of the key measures, whether it's RSI, whether it's 200-day moving average, you can look at some of these major indices and certainly make a case that things have maybe gotten a little bit overbought.
Yeah, it sure seems that way, Romain. Obviously we've had these unbelievable runs. I mean, the Nasdaq up like 40% and from October, I should say. But of course, everything has been so narrow that we worry about that as well. But I think the one of the things too is that we are reaching an overbought situation where the valuations are getting quite extended. We have the S&P 500 really reaching that 20 times forward earnings and 2.4 times sales. And those are the types of things where you sit there and you say, wait a minute, is the second half of the year really going to be that much better so that these valuations can play catch up? And, a lot of people are talking about a soft landing. Well, soft landing isn't, increased growth.
Yeah.
And that's really what you need when the market gets as expensive as it is and overbought as it is. So, run into a little bit of a rough patch as we get past the end of the second quarter here.
Well, I am curious about the second half of the year, Matt, and I am curious when you sort of look at the price action in the market, whether you think that is a rally that was on the back of expectations for either a stronger economy or stronger earnings, or was this simply kind of a trend chasing amid all the AI hype and some of the other hype here that it maybe gave folks some short-term optimism?
Yeah, I think it's the latter here. I mean, what is what have we really seen to see that the second half is really going to be that much better? It's interesting. Really not a lot. There are some things out there. Don't get me wrong. I mean, you mentioned the housing earlier, and of course, consumer confidence has been going up a little bit. But we also see where we're seeing cracks in that area where we have record high levels of credit card debt, and we heard a whole slew of retail companies saying that the consumer is pulling in their horns. But it was what I really think drove this market was the hype with AI and the liquidity injection that went along with it. I mean, you saw what happened with the Fed and injected all sorts of liquidity in March when SVB failed. And we saw that with a big jump in their balance sheet. Then we also had this issue with the debt ceiling, and we weren't issuing any more bonds. That has completely changed. So that liquidity issue, I think, exacerbated and made the AI thing seem much better than it actually is. Kind of the way the internet did back in the late 1990s when liquidity was injected to help the situation with the Y2K. So I guess my point is, if the second half was looking a lot better, I'd feel more comfortable about where the stock market is. But right now, it really isn't seeing that big kind of change. If anything, people are saying it's going to be okay because it's going to be less bad than people were thinking. Yeah. Not that it's going to be that much better.
But that gets to a bigger question here about if things end up being a little bit less bad than maybe thought, but at the same time, worse maybe in the second half than what it was in the first half. Does that mean by default we get a sell-off, or do we just end up in some sort of range-bound status where we hold on to a good chunk of the gains that we've had so far this year?
Well, it's just very hard. I mean, very, very rarely, and I actually can't really find a time in the past when the market gets this expensive, the we never the fundamentals never play catch up enough. At best case scenario is that they meet in the middle. The stock prices come down, or the market prices come down, and the underlying fundamentals improve a little bit. They meet somewhere in the middle. Worst case scenario, of course, is that the economy gets worse and the market really collapses. Not necessarily looking for that. I'm just saying that when you get this kind of a situation in terms of overvaluation, it's just very, very difficult for the economy to play catch up the way that people are hoping for. And again, it's not enough to just avoid a recession when the market is expensive. If we were trading at 16 times earnings, I'd be singing a different song. But right now, it's just a tough thing to do because history tells us that.
So guys, that is the news that we heard about this huge. So technically, guys, we know very well Bitcoin, everything was overbought, and so guys, let me go to see my technicals. Anything can happen right now, guys, because we saw everything's dropping right now because of, I don't know, because most of the big tech is overbought, and let's jump in, guys, to see Tesla, what Tesla is doing. And so Tesla right now is 268, is holding strong, guys. So if Tesla will pull down, guys, it's going to come this area, and that price, guys, will be around 250, around 253, because you see clear, guys, it does a strong base over here. We have here also again 253 and maybe 247, and you see on RSI, guys, this is the 4-hour chart. It's already declining, so probably Tesla is going to drop to somewhere on 4 hours. So yeah, so guys, keep eye on Tesla. Probably Tesla is going to drop from, you see, this is, guys, if you are if you are watching Tesla, this one, guys, the blue line is going to alternate with the yellow line, and that, guys, will make Tesla, yeah, it's now Tesla is going to drop, guys. When you see the yellow line, guys, come above blue line, this is the blue line Tesla. The yellow line is, let me start again, guys, to be clear. We are watching here the blue line up here, guys. This is the Tesla. The yellow line, guys, the 200 move upright. Whenever, guys, talk cross that line, is going to drop, and officially, guys, Tesla is going to drop. You see, guys, Tesla avoid. We are going to monitoring. If you saw Tesla, guys, are crossing each other here, and then the yellow line come below, and then Tesla move upward, and we saw the same thing here, guys. So we saw the current charts for Tesla. Whenever this huge line, guys, reach overbought, is always come making the nice curve, and we are going to watch Tesla now. Yeah, it's going to drop, so 82. So we are going to watch, guys, today how the market will close. If yellow line is close above like right now, probably Tesla is going to reversal. Thank you so much, and have a nice day. Bye.